And we did have a lot of discussion on our earnings call this morning about how we're seeing the year play out. And one of those topics is inflation. And we came out, as you said, a beat in Q1, strong broad-based growth, strong start to the year, very encouraging growth opportunities that we took advantage of in our end markets. That said, a lot of uncertainty as we look at the year, and much of that due to COVID and how our end markets, how will they recover as we go through the year? What will be the dynamics that we see? Also related to COVID is some of the snapback in demand having a disruption and an impact on supply chains. And that's coming through. We see that in inflation. We've talked over the last month or so about the increased inflation we're seeing, broad-based logistics costs, raw materials. We're seeing that impact our business, impact our view of going forward. And it's something that we did talk about price actions. We expect to be able to manage inflation with price and our actions on the supply chain improvements itself. That'll be something we can manage as we go through the year. Getting ahead of that in Q2, we talked about a bit of a headwind in Q2. So that was certainly part of the discussion, part of the picture, and part of the way we are looking at the rest of the year.
Yeah, well, I mean, it may come at you a bit faster than you anticipated. I'm talking here about inflation as a result of logistics problems out there in general and raw materials, but you have to raise prices over time. So do margins get pinched at some point, or you think you'll be able to manage it so that margins by the end of the year are where you'd like them to be?
Yeah, we maintained our guidance for the year, and that includes our EPS outlook. We think we can manage it as we go through the year. It'll be reacting quickly to these changes in the market. Sometimes it takes some time to get the prices into the market and execute that. That is what we talked about with the headwinds for Q2. But the total year, we expect to be able to manage it and continue to deliver on the guidance that we laid out at the start of the year.
Yeah, as on that guidance, I mean, you continue to say that you foresee the improvement will remain fluid and uneven as we go through 2021, given the ongoing impact of the pandemic. It feels as though we're getting to a new place here in the U.S. Do you not agree, Mike? Is it not enough for you to sort of have a firmer grasp in terms of your guidance at this point? And if not, why not?
Yeah, I think we brought back guidance at the beginning of the year. As you recall, throughout 2020, we had suspended our guidance. We were giving monthly sales reports and helping people see how we were progressing through the year. We brought that guidance back at the beginning of the year because we started to see some stability in end markets around the world, in particular in the U.S. And we saw some strength in end markets in the U.S. as we came through first quarter, something that was very positive. Personal safety, as you mentioned, continues to deliver strongly. Our home improvement business was strong. We saw some improvements in industrial more broadly, some pickup across the industrial markets. Broad-based growth, our consumer business as well continue to see strengths. That said, a number of our important end markets are still below pre-pandemic levels. And our growth as we look at the whole year is going to depend not only on continuing strength in those end markets I highlighted, but also what happens to some of those other markets like healthcare, elective procedures. When will they come back? How will they come back? We talked a bit about, we saw some improvements in our stationary office business, return to work, return to school. How is that going to play out as we go through the year? So it's really that uncertainty around COVID and globally, how does that dynamic impact these end markets? We see the view forward is that they should strengthen. That uncertainty makes it prudent for us to stay focused on and maintain that guidance that we came into the year. And we'll update as we get through Q2. We'll get a much better view as we go through Q2.
Shepard Smith here. Thanks for watching CNBC on YouTube.